Here. Welcome to the first workshop. It's going to be on support and resistances. Of course, this is a pretty basic technical analysis concept that once a price reaches a demand zone horizontally, or a zone, as I just mentioned, tends to see rejections to the upside, bounces to the upside, because there are more buying power than selling power, meaning supply and demand theory comes in and has price goes in their favor of the buyers, because the more people interested in buying and with higher quantities than the sellers, it doesn't just mean that there's more buyers. It means there are enough buyers to hold that level and zone, because there is plenty of factors that they can be looking at on this zone. The support and resistance levels are just so clean on the higher time frames. That's why I don't usually take more than the 4-hourly zones, 4-hourly levels on my trades, because they're not relevant. Not even as like the lower time frames below the 1 hour, the 30, whatever lower than that. It's very, very confusing and misleading, because price acts on the higher time frames. I do have my zones as blue when it is a resistance, and my zones as a buyer zone when it is green, to be having that already short notice that once price hits there, it's going to be a green buying opportunity with extra confluences as well. On the blue side, it's where the sellers are looking to step in and not let price go through. We do have market structure coming in from a trend. Once it hits this resistance zone, comes to retrace to see a demand zone from previous support back here, or resistance. Once resistance is broken, this was before price broke this level, it was a resistance from previous history. Now that it went through the level, it is now acting as support. The opposite. It's called an SNR flip, support and resistance flip. We're going to be using this a lot on breakouts, for example, when a level is broken and it comes down to confirm the level is actually a support now. It's something that makes us be more convicted about price going towards our way on the upside here, for example. Once we see that wick coming down here and closure above the level, like this, for a hammer candle, for example, pin bar, we can have a bullish bias that price, once it made this 4-hour or more time frame, daily, weekly, that it will continue the trend to the upside and challenge the previous high, the higher high here, confirming a continuation of the trend, really, because the trend is made of higher highs. This high was broken by this high, by this high, by this high, and now want to make a low higher than this low here. That's what a trend is basically defined by. Let's go back to the basics here. Once the price is moving up and sees this resistance, it will then probably make a little retracement, test a previous support, which can be the previous high of this swing right here, to then resume off. This is a very textbook support and resistance. Price is in an uptrend, breaks the previous high, then reaches the resistance points from previous history, or just a psychological level, or a Fibonacci extension, anything of those. The more resistant it will be, and more difficult it will be to close above or break through, because the more sellers are looking to take advantage of this downward pressure and take profit in a substantial level. We come down to retest a previous area of support, that was this zone right here, that was previous resistance, now turned into support, and then wick down maybe a couple dollars or percentage points below, even tap this level here, just to close above here the candle and resume off. Do the same thing around here, resume off. That will just make a beautiful and healthy trend. A healthy trend is not made by this, okay? This is not a healthy trend. Healthy trends do pull back, test supports, confirm the supports, then continue the overall trend to the upside. That's what we're seeing right now on Bitcoin too. I think it's a perfect example. Let's go to the real chart right now. We are seeing a pullback, right? We are seeing right now the daily chart of Bitcoin. We can see examples clearly on the chart from this swing high on the chart. It's the higher level on the past here. On looking to the left to see what price will do in the right, you kind of have to zoom out and scroll out to see what's gonna really impact the price. Now you see what a big rejection zones like this one was back in 2019. It was pretty significant rejection. It turned us into a temporary bull market medium term, and you can see that we tapped this big zone that it was between this levels here. So when you're drawing the zone, you want to look at significant taps. Like this one was the last kiss on the 12K mark before we saw substantially lower prices. So this is a pretty important selling pressure area that's going to start kicking in the right. Even though it doesn't get tapped for a long time, it's still pretty significant because we can see that price made a lot of progress in 2019, then stopped, parked for temporary gas. It was really filling up the tank on the gas station to then continue to move higher. But it will remember that the gas stations they stopped before, this was a pretty significant gas station that then exploded, right? So you can see a lot of these levels on the higher time frames. That's why I say the higher the better. As you can see right here, the zone was so clean. It even dates back to this China pump right here. Right. Yeah, if you go even further out, let's see if this level was significant. Yes, you can see these wicks over here. This level was significant all the way back from 2017 and 18. This level right here too. Yep, this level right here too, this zone. Therefore, we can know for sure. For example, this top right here was not just by coincidence. If we go up to the monthly time frame and look at the chart on the monthly, we'll see a resistance on the monthly chart of Bitcoin right at the monthly close from the all-time highs here. We can see that that's exactly the level that tapped on 2019 high. On some exchanges it went almost 14,000. We can start from bottoming from the top to bottom, meaning the monthly to the 4 hour. We can see these levels clearly. For example, this zone right here was the bottom of the bear market. We saw a pretty significant resistance here that wasn't retested clearly on the monthly chart. We just see a parabolic move up. Now we got the cool down, stopped in the parking lot and start charging the Tesla back up. Boom, got the first impulse correction, then the second impulse, right? Just to test that demand zone. This support didn't hold. Test now the next support. Significant supports are going to be tested on the way of the corrections. This was a pretty significant support. As you can see, a wick down here at the top of these two bull cycle candles, and respected here with a pin bar rejection. We can get a lot of good signals from support and resistance zones. This is the monthly time frame, right? We don't have much. Let's just say we have this level here. Now on the bull run of 2021, we'll probably not retest. There's so much downside to here. Yeah, we'll probably not retest 20,000, but it's a pretty significant support zone. If it came down, retest will be so juicy for position trades, right? Because you're looking at the monthly time frame, you're looking to be positioned in multiple of these candles, right? Let me go down again to the weekly, see what we got going on here. As we can see on the weekly, we can see a lot of information. This chunk of price action over here was what, this whole thing here was what held the lows of 2019 after the correction. As you can see, kind of served as a support resistance flip right here to resume off the trend. But the cleanest, one of the cleanest support and resistance flips that I think was this one right here from the 10,500 mark. That was this previous rejection here too, triple top rejection. This was very concerning. I was kind of leaning to neutral before this low wasn't broken. That's the same perspective I'm in right now too. As long as this low doesn't break, I'm not that bearish on the short to medium term on Bitcoin. So we can see that we were in an uptrend, making higher highs, higher lows in both the weekly and the daily. But once we broke that triple top region, which was a really, really high confluence zone of resistance, we see got a couple of rejections here, really significant ones on the weekly time frame. We can see a wick. Once we broke it, we still made a wick. Now it's the juiciest thing is the retest of this support and resistance zone that is now acting as support once it was above, now coming from the upside to test if it is a positive and bullish zone. As we can see, we did have a breakdown through the 10,350 level, which is this top right here, but we did manage to print a bullish pin bar hammer candle, and then a successful breaking out of the level on the support and resistance, and then also a weekly candle which proved that the level was here to stay. This support was here to stay. And then you can just see what happened after. We did get a little bit of retest on the daily time frame on this super rally. Let's just see a couple. For example, this level right here was a significant high, was a psychological, not really the psychological, but really getting close to 30,000, and then we got a significant rejection on the daily, about 10% down. And we did have a zone over here which we could draw as a support zone, which was previous resistance broken above, retested as support, perfect rejection, then bounce. Now we're seeing a correction and test the support again along some other confluences, and bam, you can see the upside that happened after that. It keeps on coming. It's just a repetitive psychological structure that human nature does. We do have a support region over here from this level that is being respected as of now. We did have a previous support over here, which is now acting as immediate short-term resistance. Let's put this as support. And this will also act as, right now, medium-term resistance as long as we are below it. So just for you guys that are beginners, I'm going to go over this again. When we are below price, where we are right now, this zone right here and level is acting as resistance. This is a significant level which held this daily low. Once broken below, it's acting as resistance. This is a pretty important level, acting now as resistance exactly now. This is a pretty significant swing low. I like to also use the levels. You can see I have all types of horizontal rays to identify what type of ray I'm looking at. I really like daily levels. As you can see, I have the daily level over here that I can already know. I don't have to actually, analyze this all the time and just leave it here. This is also a daily level. This is also a daily level. And this is also a daily level. We got a bunch of daily levels. Let's just delete the ones that are very close to each other. Okay, this looks pretty clean. Let me delete this. I like to highlight the all-time high level too, just so you know how far we are from all-time high. The zones I like to extend to the right because they're still going to be relevant even though it's over or below them. It's not relevant when it's too far away. For example, this one is not relevant right now, so I just keep it short, keep it clean. Simple is better. Instead of having multiple big zones, having very pinpointed zones on each time frame too. Let's drop down to the 4 hourly and identify some levels that we could probably see significant resistance or support being formed. They're still going to be significant on the 4 hour because the higher the time frame they are, the zones and the levels, the more significant they are, right? This is like a simple math, greater than and less than. This is, for example, a pretty significant level which made the 4 hour swing for this major move to the all-time, which broke this all-time high. This level, for example, was pretty significant before, but since it is so far away now, just highlight okay, never mind. I'll just come back here. 4 hour level. This was actually an all-time high previously. I would just say it is a daily level now. This was a pretty significant level, but now it's not that significant anymore because we're so far away from it. I'll just keep it on just for the sake of it, but we're so far away from it, it's just too much right now. Just do things that are closer, and as time passes by and price comes closer to the more significant, like this level was here, support and resistance flip, rejections, now to the downside, turn into a pretty neat support and resistance there as the lower lows and lower highs we're making. We're just gonna get rid of it now. Okay, the levels on the higher time frames that I said are the most important. Let's just go to the monthly back again and get rid of these small time frame zones. You can also just, if you don't know, you can double click it and see visibility, and now highlight the visibility that you want to see. Just want to see on the daily and below. Let's see if we can find a significant support and resistance level which played out like this right here on the early days where it was 3 digits. For example, we have this monthly level right here. I usually like to say it's M. Where is it? I usually use a horizontal for this when it's a monthly level. I'll just say it is a monthly resistance. It will be right here as MR. Then it turns into a support here as we saw the retest. So it is a monthly support because we're trading here now, right? As we traded above it significantly impulsively, now we're corrected. We have a zone around this level too. The zone is probably around from here to here on the monthly because it's closed here, and this candle was significant gave us very confident bias that the price was going to go up after it made this wick with a higher low compared to the previous, and broke and closed above the price that it didn't close above before, making a higher high on the line chart as well. Now seeing this 450% monthly candle in November 2013 after this previous bullish candle over here. We have a potential support and resistance to the left. Right now it's a buyer zone because we're above here trading in the correction, and we have as well the long-term bullish perspective as both as a fundamental analyst and as a technical analyst, because price make higher highs, higher lows. You're expecting a higher low compared to the previous lows over here, which were as well significant levels. I have 100% sure that a bunch of traders didn't get filled on these significant lows looking for those wick downs and then resumption, but it didn't happen, sadly, for those traders. So we gotta pay attention on the rejections. For example, this wick right here already showed that there's a lot of buying pressure. Now we're still bullish because of this wick on the monthly. The monthly wicks are very important. As you can see, monthly wick, monthly wick, monthly wick, monthly wick downside, monthly wick sideways, monthly wick bottom, monthly wick bam, monthly wick bam. This is not a candlestick lecture, but it's just to give you a little bit of perspective on the support and resistances plus confluence with the candlesticks. This right here was such a clean zone. This monthly close and all of this clutter over here was, and from this monthly close to this monthly high was just so much resistance here on these levels, right? Resistance, so many times, right? Let's just count. So 1, 2, 3, 4, 5, 6, 7, 8 resistances before resumption to resume the overall trend, making a higher high closure above this level here. So making a weekly pivot. This was a pretty significant point, which I did warn my followers and members. As you can see, let me switch to line chart. We did see that line chart weekly pivot. And once we see a pivot over resistance, I can already assure you we will probably break it, as we did break it. Bam. And we'll also break those all-time highs pretty easily. This was the lecture of today, workshop number 1 on support and resistance zones and levels. Hope you guys are very excited for the next ones to come. If you do, please leave me a message or a question, and I'll be very, very eager to help. See you on the next one. Bye.